Welcome to TRADEREP. This is Short Hammer. It is the 19th of June 2019, and we are looking at Amazon. Now, Amazon, we were looking for a pattern repeat, and we got that. So what we wanted from Amazon was from the 1747 area, we wanted to run up through the 1818 by 1823, up through the 1845 by 1858 supply-demand zone, and then a tap of the 1914 by 1923 supply-demand zone. And so did we get that? We did. And we also received a push over this 1845 by 1858 area. And we consolidated above this, had a back test of the 1845, which springboarded us up into the 1914 by 1923s. Now here, that move took a few more days on the back test and the leg up, but we still got the completed move. It took a few more days here, and the best way through resistance, if you look at this, the resistance here was 1889. The resistance here was 1893 by 1895, the mid 1890s. And we tested that on the 11th of June. We pushed up into 1893.70, pull back. And on the 17th, we pushed back up into that area again, pull back. But the next day or overnight, we gapped up through that. The best way through resistance is to gap through it. Shout out to BB2. And that's what we did. So if you look at this, just this run here is epic. If you just look at the 1747 here retest and the bounce after the initial touch of the 1818 by 1823 area, this pullback and bounce, this move this is from the 25th of March. And to get to this area is the 23rd of April. So almost a full month to make this move here. To move from 1740s to 1914s by 20s took almost a month. Here, we started this move basically on the 7th, and it's now the 18th. So about 10-11 days, and we completed in 10-11 days a move that last time took us about a month to complete. So keep that in mind of how steep this climb is. Though it took a few more days once we got to the upside above these 1850s, it took us a few more days to take the next leg of this journey. This is a very steep climb. So let's go back or switch down to our 5-minute chart. So how did this play work out? So we gapped up overnight, and right here, this blue dash line is the monthly pivot. So what we were expecting in the chat was a back test, a potential back test of the mid 1890s, 1895 area, an area that we struggled to get through before. So would we back test that and use it as a springboard? So we expected one of two things: either a back test to the 1895 area and a hold, or a potential gap close and hold and push. And then the next thing that we expected also was a potential hold of this blue dash line, the monthly pivot, and a springboard up. So that's what we got. You saw the push down here below the monthly pivot. We went as low as 18. Actually, no, hold on a second. What is this here? 1899. So we cracked under 1900. Didn't go too deep under. So we didn't make the 1895 area that we were expecting at all. But we popped back up, and you necessarily wouldn't enter long here because you haven't seen. Are we gonna hold this monthly pivot? The next candle here, it pulled back and tested the weekly pivot at 1902. The monthly pivot is at 1902.03, and the weekly pivot is at 1902.88. On this pullback, you could have gotten in long and used this 1899 to the 1895 area as your stop loss, and it did hold. And now you start to see the buying coming in and pushing us up into this next area, our supply demand zone, this 1914.24 by 1923. And this does appear to be a bigger supply demand zone, but some supply demand zones are bigger than others. That's the area where the buyers and sellers meet and they fight it out. And we saw the initial push up into the 1914 by 1923 area. You start to see these upper wicks, this rejection. And this dashed line here, this purple line, is the quarterly pivot. And you start to see the rejection, but you also start to see the buyers step in and try to push this up over the hump. Once we hit this area, we let quite a few people in the chat room know, like, hey guys, we're up against the quarterly pivot and the supply demand zone. A lot of people took profits here. They weren't waiting to see if we were going to hold, if we're going to push through and take the next leg. Green is green. Secure the bag. The second you get an opportunity to secure that bag, you take some profit off the table. Whether it's scaling out, which is the chart tech theory is take off 75%, let 25% ride, or if it's you don't have a ton of contracts, take it all out here, you secure those profits. We consolidated a little bit, gave a little push through the quarterly pivot, but you're just seeing these upper wicks and the rejection here, and then you start to see us coming down, then the drop. So if you weren't greedy, you could have taken profits on this push and exited, which is a good time to exit Amazon, and then you wait for a reload of whether it holds a level on the back test and you get in for less contracts and see if you get another wave up or continuation. Amazon is great for that. And then we saw the pullback throughout the day. Below the supply demand zone retest, couldn't regain. Pullback testing the pivots, the weekly pivot here, the monthly pivot here, the blue dash line and the gray dash line. So the blue dash line, the monthly pivot, the gray dash line, the weekly pivot, bounce, and just bouncing along this area, unable to really get that springboard and push up. Now, tomorrow, or should I say later today, is the FOMC. And what we recommended to a lot of members is if you're not in a duration position, a position that you're planning to hold for a longer period of time, if you're green in your position, you may want to take profits if you feel that the position that you're in may be affected by the results of that meeting. So you don't have to take the risk of maybe the market will tank or the market will run, because we're not sure. Whatever they say from the FOMC, whatever the minutes or whatever the information comes out, we don't know how the market's going to react. The market is expecting a rate cut. So if Jerome Powell or whoever else may speak, if they're not dovish enough, then we may see a rip or a dip. We don't know if they're hawkish. It's all going to be about their tone and the interpretation of their tone. And there's a lot of pressure on the Fed to cut rates because that's what the market's expecting right now. So just be careful of all your positions headed into the FOMC. And after the FOMC, just give it a few minutes to let the dust settle and see which direction the market chooses. If the market chooses the direction, we might just go sideways. We're not quite sure. But depending on how the wording and what is said from the FOMC, we should have a direction after that meeting. And so we'll see what comes out. Just be careful of your positions. If you're going to trade, try to get in and out of things early. And unless you're planning to play the volatility reaction or the volatile reaction, potential volatile reaction to the FOMC, make sure to exit your positions if they're day trades or they're short-term positions that you're holding. That's just my opinion. And also, as far as Amazon, depending upon the reaction to the meeting, just watch these levels. Watch the 1923s. If we rocket through here and start to run, you can watch for a push up into the upper levels, maybe this 1937 to the 1945. But if we start to go down, remember our levels: 1895, 1889. A little bit lower. Let's look at this: 1875, 1868. You have these levels. You remember these levels. Just if we start to go down, to me the door that we don't want to cross, or the threshold we don't want to cross, is the 1845. For now, we want that to hold. That was our springboard up into this action. So we want the 1845 to hold. That's our bullish springboard. So we're gonna watch all these levels depending on the reaction to it, and we'll see what happens. But if we take off to the upside and pop through the top of this supply demand zone, whether it's continuation because the demand is so strong and the buyers are just pushing us up, but the pullback should give us a nice entry, whether it's a pullback to the quarterly or pullback to the top of this supply demand zone and a push through. So we'll see what we get tomorrow, or if we sell and we push through the 1895 and push down through the 18s, if we just push, we'll see what the retest gives us, and if we see continuation to the downside. So we'll see, and maybe it's just going to be some sideways action, some bouncing around, because whatever is said is just so vague. It doesn't really give us a position, but I believe the market is looking for strong direction. Like whether it's, hey, we're strongly considering rate cuts, or there is no data that we've seen that shows that a change in our position is necessary at this moment. So they're going to expect something to be said to give us a hint. And no matter how vague his statements may be, people are going to try to parse those words, and we'll see how the market reacts.